And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast on this Wednesday, December the 21st. My name is John Hoagland. As always, I appreciate you spending a little time and trusting me with that time this morning. Today is the winter solstice. That is the shortest period of daylight in the northern hemisphere. The winter solstice actually occurs at 3:45 p.m. Central today. 3:47 actually Central today. And the good news is that from this point forward, days will start getting longer again. So it's the beginning of winter today. Hope you're all safe and warm today. It's about 20 degrees here in the Chicagoland area. I see we've got somebody in southern Montana that is at a balmy negative 12 degrees. Stay warm. Bear goes long. Montana is one of my all-time favorite states. I spent some time in Montana up around Flathead Lake and Glacier National Park, and I think really that's where God lives. There or in northern Idaho. Idaho is also a beautiful state. So what do we got going on today? Well, as always, we're going to be focusing on accurate context, thinking about risk management before we do anything, and staying patient in our trading today. 9 o'clock Central, we have two economic numbers due out. Consumer confidence that may be somewhat impactful for us today. Existing home sales also may be somewhat impactful. And then 9:30, of course, will be impactful for crude traders, the EIA petroleum status report. We've got U.S. stocks set to open steady to higher. Nike and General Mills posted positive earnings yesterday and revenues yesterday. So maybe that's got a little something to do with it. We're not usually talking about earnings. It's not really earnings season, but we've got traders facing consumer confidence today and as well. And don't forget about the final GDP due out tomorrow. Now, that could be a big nothing burger if it comes out as it has been predicted, but you never know what's going to happen. So we'll be paying attention tomorrow morning at 7:30 for that GDP, final third quarter GDP number to come out. Reading this morning, Tesla is planning on some layoffs next year and freezing hiring. No further comments from what I saw were offered by Tesla. Crude prices have rallied to the upside after the API posts a 3.1 million barrel draw in U.S. inventories. The EIA today is forecasted to be a smaller 1.6 million barrel draw. We've got the VIX down 3.6% this morning, down at 2070 as the equities roll higher. Of course, we're going to see the VIX to the downside. We get dollar index down slightly at 103.9, and the yield on the 10-year also down slightly at 3.6% this morning. If you like what you see here on the Market Forecast Recap, anything we do, make sure you tell your friends and make sure you hit the lucky like button. Sharing, commenting, feedback, heckling, and love are always welcome here on the Market Forecast Recap. Anything we do, if you have any feedback or constructive criticism, you can email that to me directly at jhoagland@topstep.com, JHOAGLAND at topstep.com again. So Let us know what you think. Let us know what you're looking for. Let us know what we can do better. We're always looking to improve here at Top Step in every aspect of the company, and it is through your feedback that we have been able to continue to improve. Good morning, everyone. Got to say good morning to everyone. Dimitar first in the room again this morning, winning the prize. Scott saw and he conquered. Happy whatever, Shaw. You got it. It is Wednesday. Joel MB, good morning and Merry Christmas to you too. Caprice, good morning. Jimmy, morning all, sixth place. ZK, good morning. Bear goes long. Stay warm there, Bear goes long. I wonder where you are in southern Montana, maybe somewhere around Bozeman. Caesar, good morning. Charles March, congrats to all those that got funded yesterday. Yes, we've seen a lot of folks getting funded recently, and maybe it's just the fact that we're actually talking about it now. So congrats to all of you getting funded. Congrats to all of you working on getting funded. It is your success that we are seeking here at Top Step. Jules, good morning. Joel MB. I literally laughed out loud when I read this joke. The doctor, are you involved in any dangerous sports? To which the patient answers, well, sometimes I disagree with my wife. I had a good chuckle on that one. It's almost as though you know my wife. Vince, good morning, my guy. Glitter Sandwich, Terry King, Dr. VJ. Mike, happy solstice to you as well. Anissa, Alex, Alejandro, good morning. Pushing -40 up around Flathead. My goodness. Yeah, it's a pretty short winter up there, isn't it? Pretty short summer, I should say, and a long winter up there. JST Wave, good morning. Brody, Adrian, good morning. Jason Lewis, Khalid, Ray, good to see you this morning. We're going to see if we can't find a limping wildebeest here this morning. Naztic, George, good morning. Lacey is curled up in her bed right next to me in a nice winter hibernation. She's going to she's going to the spa today. She's going to get all cleaned up and her nails done and everything for the holidays. I'm sure she's excited about that. She does not like that. But we've got some people that really like her. They know that she's just kind of high anxiety when it comes to that stuff, and so they do a nice job with Lacey. Alan, good day and happy Christmas to you too. Bill Phillips, good morning. Hegel Matters, and Alex. Is it the sol? It is the solstice, isn't it? Yes, it is. Skol, yes. December 21st. So all you in the southern hemisphere, enjoy your summer. All of us in the northern hemisphere, we're going to get through our winter. A lot of folks do like winter. I used to love winter sports. I was a skier. I was a snowboarder. Not a snowboarder. There wasn't really any snowboarding when I was skiing, but a snowmobiler, and I really enjoyed the winter sports. Not so much that I've gotten a little bit older. The cold really hurts a little bit more every year. Looking forward to one of these days moving a little bit closer to the equator. On that note, we've got some opportunities here today, some possible market changes, some possible continuations of markets, and we are going to have a good look at these charts. As a reminder, no group coaching today, no Make Hogue Money today or tomorrow. We're taking a couple of weeks off of those. There will be no forecast or recap next week. I'm going to do the forecast tomorrow and the forecast again on Friday. We will have a recap today, however, and we're looking forward to a little bit of winter rest and reflection and preparation for next year's trading opportunities. It always seems like we start fresh at the first of the year, zero out, and get back into just maintaining our process. It's so important to have that process. Working on some stuff that we're going to be presenting to you the first quarter of next year on process and the auction process and market profile, and we'll be bringing you lots of hopefully good and useful information for you at the beginning of the year. been working on those on and off here as I have time, and looking forward to getting those wrapped up by the end of the year and prepared for another fine year of trading here at Top Step. All right, we are going to start with the charts now. We're going to start with the daily. In the S&P, we've got a nice little rally started here. Maybe we've gotten a little bit too short in the hole, finding some support at weekly kickoff low, and perhaps heading the other direction. We're going to take a look here right now. So here's the S&P's daily chart. We have been unable so far to reach the measured move off of this head and shoulders. Maybe I was a little too aggressive with putting the neckline where we put it. We were looking at a measured move down to about 37.60. Weekly kickoff got in the way. We've got excess below weekly kickoff low. We've been unable to maintain any price or time down below that. And now we see the market continuing this move up. Yesterday we had a small up day, basically just maintained settlement. We added 8,300 estimated open interest. We can start to look at open interest again because we are no longer involved in rollovers. So we've got an up move, an increase in open interest above the rejection of the weekly kickoff low. There is the potential of a bear flag being created here. Take a look on the 30-minute chart here. So price has moved lower. We've got a move in the opposite direction that seems to be kind of shrinking as far as ranges are concerned. If we start to see volume fall off and open interest fall off inside this channel, then if a breakout down below it could create a bear flag, which might push us back down through weekly kickoff low and to a potential eventual check down to the measured move off of the head and shoulders formation. So I'm feeling a little bit of cognitive dissonance as far as my thoughts on this market, so which reminds me to always remain patient. Look at what the market is telling us. Right now, the market is putting in higher highs and higher lows in short time frame when we haven't broken out below this. So I'm still looking for opportunities to buy weakness. Well, we know in the S&Ps at least, we're going to be opening with a gap. Well, that's going to put gap rules in place. It's going to put us, if we can't close the gap relatively early, looking for opportunities to buy weakness. This trend line down here could be interesting. Overnight inventory is long. What I'm thinking is we either need to be way too short in the hold down here, which is quite possible. We've come a long way in a short period of time for a move to the upside, or we're going to need new business. We break out the top of this channel here, we could see some pretty good potential moves to the upside. We've got a naked point of control right here that would be an obvious visual target for that move. And we've also, we've still got a little gap up here with a naked volume point of control right through the middle of it. We've got another naked volume point of control at weekly kickoff high. We've got to see what the economic information that comes out at 9 a.m. Central today has to do with us. But if we're either too short in the hold down here, or we're going to see some new buying coming in if we're going to continue this move to the upside. This is the poor low that we had Monday. Tuesday, we looked below and left excess down below that. Excess. Price got too cheap too quickly. Sellers wouldn't sell it anymore. Buyers took over and pushed price higher, and they are looking like they are still in control. This is our overnight profile. It's very even. It is using up the market's ability to facilitate trade here. So it's probably not going to just stay in the overnight range. It's going to extend above, or it's going to fail and come back into range from yesterday, which does put forth a possible value area special situation play. Looking at this on the 30-minute chart, we'll make this real big. So the value area special situation play, some people call it the 80% play. I look at it more like a 65% play. Dalton says he doesn't really look at this anymore. He doesn't find it that valid, which everything has its time to be valid and has a time when it's not going to be valid. So if we come back, if we open with a gap, we close the gap, we come back inside and re-accept inside yesterday's area of value, that could bring us down to value low from yesterday, which would technically be a breakout of a bear flag, which might bring us even lower than that, back down to weekly kickoff low or points lower. The bottom is looking like it's in for now. We have excess at the low, taking out a previous poor low. We know we've had some good success using weekly kickoff low here as support. If we get the opportunity again, it might be an interesting place to throw a line in the water. Because what we're doing here is we're fishing. We're trying to throw the line in at the highest probability, lowest risk areas. So at least initially this morning, if we can't close this gap relatively early, I'll look for continuation to the upside, barring any surprises in our economic information or any surprises in any unknown information that may come out. As we all know, we have anything that can happen. Here's crude oil. Possible state change today. We had what was appearing as a bull flag. We've broken out above the bull flag yesterday. We've now got continuation above weekly kickoff high here, and we're seeing some continuation above this trend line, which is off this November 7th high, point of contact, breaking out above it. There is potential for this market to continue this upside move. We lost 1,200 total in open interest, but in the February contract yesterday, we added 4,700. All right. That was an up day. Volume was pretty good yesterday. So this bull flag, we've got a breakout of it. It could potentially bring a pretty decent upside move. Technically, we have EIA today. If something goofy happens with the EIA, of course, anything can change. So, overnight inventory is long. Here's our breakout, close above this trend line. Another close above the trend line. No real momentum here yet, but we were up against the weekly kickoff high, which is an important inflection level. We rejected it on Monday. We rejected it on Tuesday to a degree. Now we're opening above it with a gap. Okay? Again, gap rules. If we can't close the gap relatively early, we're looking for opportunities in the direction of the gap. We've got weekly kickoff low that would be supportive if the market came back down to it. It was resistant. Sometimes resistance levels, when approached from the other side, become support. Then, of course, there's always the possibility of a failure at that level and a possible value area special situation play to the downside today. I don't necessarily see that happening, but I'll be watching for the signs of it. What is acceptance? Acceptance is when the market comes back inside a previous area of value or balance and spends time there. If we're going to see a value area special situation play today in crude oil, for instance, we'd have to close the gap, we'd have to come back inside value, and we'd have to mark time and volume back in that area. We used to say that we needed 2 30-minute bars to close back inside the previous day's area of value to indicate potential acceptance. Sometimes the market's going to do that. Sometimes it makes it easy to catch this trade. Sometimes it makes it very difficult. Sometimes upon price getting back into value, everybody recognizes it, and the value area special situation plays out very quickly. Sometimes the price will come in and leave, come in and leave, come in and leave. And every time you do that, you get a little bit of a stop out. And then when you finally give up on it, that's when the price is going to go to the other extreme of value. So I understand why our godfather of market profile maybe doesn't watch the value area special situation play that much. But it's valid when it's valid, just like everything, and invalid when invalid. What else do I have here for you? TPO chart. Normal variation trading day yesterday. A little bit of a weak low here yesterday, but we have a little bit of excess down here. Excess this is Monday. A little bit of excess yesterday. Normal variation day. We're going to be opening with a gap. We've opened with a gap. Again, if we can't close the gap relatively early, we're looking for opportunities to buy weakness. Gold. All right. Good opportunity at weekly kickoff high yesterday for a short. Provided 50, 60 ticks. We're still below it. Wait, we didn't do the Nasdaq yet. Hang on. I'm getting out of sorts here. Weekly kickoff support again yesterday. No measured move off of the head and shoulders. Is this truly a head and shoulders? Typically a head and shoulders. Price is going to go up to it. Is this enough of a move? I still question that. Open interest increased by 4,500 contracts yesterday on higher volume, on rejection of weekly kickoff low. Again, we're either too short or we've added some new longs that might protect this area. Here's the 30-minute chart. No gap. A little bit different than the S&Ps. Again, we could be in a bear flag here. We found support yesterday at weekly kickoff low. Finished not too bad. We actually finished lower in the Nasdaq. Overnight inventory? Not really. No gap. Opening in range and in value says, we're going to be patient. We're going to look for better trade location as the day goes on. Maybe after the first hour, after the initial balance is established, we'll find better trade locations. In the S&Ps opening out of range and out of balance, it's possible that an opening range trade could play for us. We just have to be careful and manage our risk around that. Here's the TPO chart for the Nasdaq. Again, we have an excess low. Price got too cheap too quick. Sellers backed off. Buyers took over. Those buyers are still in control. We can see this market continue its move to the upside. Right now, let's move to gold now. All right, so weekly kickoff high 1831, still resistant. We did take a brief look above it yesterday that failed. However, we did add 12,000 contracts yesterday on an attempted break of an area of balance we've been in for 2 to 3 weeks. So that open interest in volume yesterday was pretty healthy for another attempt at getting above weekly kickoff high and attracting new business, new buyers. So we did stop short of true acceptance of the upper range here. We're still working on it. Take a look at the 30-minute chart here. New overnight inventory. Basically trading settlement. No or very little change in the perception of value of an ounce of gold at this point. I'm not going to be in a rush to do anything here. This is a completed naked point of control check from yesterday. Just going to clean up a little bit here while we're here. No real rush to get into anything here in gold. Take a look at the TPO chart. So yesterday, here's a kind of a good idea of when we can't close a gap relatively early, we look for opportunities to go in the direction of the gap, which took us basically up to our weekly kickoff high, where there was a failure to accept above it, and then we just kind of ranged. We're still in that range. This market is still digesting this level. We can't forget we do have a week high up here from the 13th of December that it has yet to be rechecked. Week kind of excess down here, week low here, continuation, and then a gap. So again, my suggestion for gold this morning is just stay calm, stay cool. There might be some big opportunity here today, but while we're in range and value with little perception of change in the value of an ounce of gold, stay patient. It may be a kind of a breakout type situation if we start to see some acceptance, some volume, some time, some momentum, participation up above the weekly kickoff high, and a failure above, again, just keeps us kind of range bound here. If we take out the overnight low, we've got, some weakness in structure here. We've got a gap from the day before yesterday to Monday. We've got a naked point of control down here that I've yet to put on. So there's, things to look at on both sides. But if we can't accept above weekly kickoff high, then we may be a little bit long up here or not short enough. So again, stay patient. This is the euro. With the gyrations after the Japanese Bank of Japan did what they did yesterday, I'm surprised that the euro hasn't been a little bit more productive as far as providing opportunities is concerned. It is really just kind of range bound, very indecisive for the last 3 days. We did break 1, 2, 3 points of contact, for almost 4 points of contact on this trend line, but we're not getting directional. We're just creating balance. This balance is doing a good job of evening inventory. If we were too long up here, a pullback, a sharp pullback, or a long period of consolidation is what it takes to kind of even out inventory for the next move. We're really range bound here. And in staying range bound, we're using up the market's ability to facilitate trade here. Everybody that wants to trade in this area has had plenty of time with which to do so. So take a look at the 30-minute chart here. Range bound. Do we have any overnight inventory? No. So my focus, I think, in the euro today is going to be at these short time frame extremes. Kind of looking at this area up here, 107.30, and this area down here, 106.50, right down here, as the short time frame areas of balance. Balance rules say we fade those extremes. We get down here, we buy it unless it proves otherwise. It gets up here, we sell it unless it proves otherwise. And we're right in the middle. We're not that far from opportunity here in the euro. We just have to stay patient and look for the better opportunities. We could find trades today, I'm sure of it, but I'm not too sure that we're going to want those. Excess at the low, excess at the high. Excess, low, excess, low here. Low, excess, low here. Now this is when March was the back month, so it gets a little bit toothy. So if we break to the downside, I think there's plenty of visual targets down below via the profiles. Okay, this is the 10-year. We're seeing now some rejection below balance. We had a pretty decent move to the downside, rather feeble as far as open interest increase is concerned. We only added 22,000, which isn't all that great, which isn't all that big for the 10-year. We had some pretty decent volume on that breakout to the downside below last week's low, but we're still not changing market state until we get to either of the weekly kickoff highs and lows. So last week's low today, I was viewing it earlier today about 5:30 when I started looking at this market, that it was going to be somewhat pivotal today, long above, short below. Be cautious doing that. Well, see, we've looked at it as a pivotal level. If we're long above, we would have had to been pretty early here today. We've got things going in our direction. We've got plenty of weak structure above the gap from yesterday to the day before. Naked point of control. It's very difficult to find visuals below price. So we still, if we see, the rates can kind of continue to creep higher today, creep lower today, we see price of the 10-year continue to creep higher. And take a brief look at natural gas, kind of fading this out of the forecast, but such a wild market. I love checking it out. The volume and open interest failed to impress on this downside auction yesterday to this swing low. It did close pretty poorly. Is this downside auction beginning to weaken? And it looks like it maybe today, but of course, we're going to have to wait and see. The bulk of this move to the downside occurred in the overnight session. Here it is on the 30-minute chart. So the bulk of this move did happen in the overnight. So the major players weren't really involved in this. Basic consolidation yesterday. On this 30-minute chart, you can see that there is a pretty good degree of excess at the low. When we go to the TPO chart, there's some sort of a display error because the profile doesn't look like this. So there's a little bit of excess down here. And then we just kind of fell range bound. Opened with a gap, unable to close the gap, has me looking to perhaps come back and repair some of this information. We just traded in regular trading hours to this naked point of control. The nearest one is up here. A gap close would be all the way up to here. One thing that has been on my mind since looking at this, if we can remain with this gap and then gap higher tomorrow, that puts in an island low. This market has been very island centric, if you will. Okay, so this looks right. Okay, our display error, there's the excess we were looking at in the 30-minute chart. Price got too cheap, sellers wouldn't sell it anymore, buyers took over. Now we've got a gap, unable to close this gap so far. Pretty big range so far for the first half hour, right? But again, if we can keep this as an island and then trade higher, leaving another gap, I think that's going to be pretty powerful reversal pattern for this market. We had an island top here. Now we may be putting in an island bottom here. And that could be something that we'll be keeping an eye on and might provide some pretty big opportunity for us. Okay. So, it's Wednesday. I will be seeing you for the recap today. Please join us. We just try and relax, take a look at what happened in the markets, and think about tomorrow. tomorrow's recap will be it for the year, for the rest of the year. So there won't be a forecast on Friday, nothing next week. And then we come back strong on the first Tuesday of January. Yeah, he doesn't pay attention to open interest nowadays either, because he says they're so widely hedged. But the major players are using the S&Ps to hedge against other products. When the larger players do enter the S&Ps, the E-mini S&P, they are creating communities or groups of traders in shorter time frame. They're creating over long or over short conditions. We used to look at this in the pit. We could see when the major banks were buying the S&Ps or selling the S&Ps. If they were selling the S&Ps, then the pit was going to end up too long. And this was something that we used to kind of recognize opportunity when our direct competitors, when the other local traders trading in the pit, we knew were too long, then we knew at some point during that session, maybe late in the day, they were going to capitulate. They were going to have to flatten up. And we could use that information to our advantage. So when I say that, when we're looking at open interest, part of it is the health of the auction, because when you get a reversal pattern and there's a big jump in open interest, that says something to me. Now, open interest is, like everything, not always useful, but compared with volume delta and using it as part of the ability to recognize when your time frames, when speculators, be they day traders or shorter time frame swing traders, are all one way, that's when we start to look the other direction. So while Jim says, he doesn't look at open interest anymore because everything is so widely hedged, I get that. But it's when the longer time frame is executing in this contract where we start to see the shorter time frame traders get stuck. And when they get stuck, the market is going to move to their point of the greatest pain. And if we can recognize that, even once in a while, it can provide wonderful confidence in a trade and some wonderful opportunities. I would never argue with Mr. Dalton, the godfather of the market profile. It's just something that I've learned to keep an eye on. And when it is impactful, it is very much impactful on my decision making. It helps keep me out of trouble first. And then if I can find profits using that information, wonderful. And Dr. VJ, I appreciate that you told me that. I have a user that sent me a whole list of things that Dalton doesn't look at anymore. But we all look at the things we look at. We've had some traders, including Anne Marie Band, say, she's looking at important levels in options. We have Joe D's been talking about looking at these put walls and call walls that he calls them, the website that he's looking for. That's what they call them. They're accumulations of longs and shorts in the puts and calls in the S&P, where you may be able to find those points of pain where traders are going to have to adjust inventories. ZK, can I suggest a short video series where Hogue talks us through a trade he took from the previous session? For example, how he saw the trade and why he took it. ZK, I'm writing that down. I think that's a very interesting idea. So, yeah, I'm going to think about doing something like that next year. All right. Looking for a Shady and green spot on the lake to throw in the line. Absolutely, 100%, right? Make Hogue Money is a good opportunity to see Hogue execute trades as they happen. The trade ideas are communal, right? But Hogue executes them. Seeing him execute would be instructive. Thank you for the feedback and the idea. If the Nasdaq moves lower, does that affect your thoughts on the S&P? They are, very correlated markets. They're the same asset class, right? So they're going to move overall in unison. Sometimes there's some pretty big variances to that unison, but I find that if I'm trading the S&Ps, I get the best information on that trade from the S&Ps. So there are times when I might look to the Nasdaq near an execution for the S&Ps. Sometimes the Nasdaq will react faster and quicker. But as far as using the Nasdaq to make decisions in the S&Ps, not so much. And I wouldn't in either direction. If I was trading the Nasdaq, I keep an eye on the S&Ps, but I'm going to use the information that the Nasdaq is telling me if I'm trading the Nasdaq. Middle of the middles. Adam, robot trading is fun. Reversal strategy rocks. All right. Lay low in the weeds. Yup. Zeke says he was thinking more like YouTube shorts. I like Make Hogue Money, but it is our trades. It's communal. We vote. Just want to see his. Noted. We're going to see if we can't put something together for that for next year. Double Island reversal low, right? Jimmy Decker, you're welcome. Steve, Sarah, thank you. We're getting pretty long in the tooth here for this market forecast. Somebody hear something? So tomorrow's going to be it. Looking forward to seeing everybody and having a good market forecast for the last one for the year. And we will... Yes, funded traders follow the CME schedule. There was an email that went out. I would contact support. Hang on a second here. See if I still have the email. I do not. Contact support to get the information from the horse's mouth, if you will. All right. So get out there and profit today. Trade well. Be kind to yourself. Be kind to others. Say a prayer for world peace. Anybody hear bells? Maybe the Santa rally's on its way. We'll have to wait and see, huh? Get out there and profit today. Trade well. Blessings to you all, and I'll see you tomorrow morning. Well, I'll see you for the recap today, but tomorrow morning too. Have a great day.